And you hear people's interesting answers in there. From some saying they'll use that to take care of their family members, or some saying they'll blow all the money on parties. Whenever I get the chance, you can just take a look at that video. Anyway, most of the people who are here today, I'm assuming, have some goal for why they want to invest. Some of you are looking to invest for retirement. Some of you are looking to invest for a wedding. Some of you are looking to invest for a business you want to start. And that's a good thing. At the end of the day, when you are doing investment, you want to have some goal in mind, because that goal is what's going to give you the discipline to save and invest so that you can achieve whatever goal you have in mind. If you don't have that drive, it may be very difficult for you to invest. A lot of us have competing demands, things that require our money. And so if we don't have a strong reason why we are saving or investing for it, we just put that money and use it for a lot of other things. So as we are going through the session, I hope you keep that in mind, the reason or the goal for which you want to invest. And then when I share the concepts with you and you get a chance to start applying them, remember those goals, because there are times when it's challenging, you have a lot of responsibilities and other things. But just like some of us have been able to create maybe this, what's the name, credit union or the rest, where they deduct money from our account every month. Let's see investments like that, where it's like, okay, every month I'm going to try and dedicate maybe 100 cedis, 200 cedis, 300 cedis to this investment, because I know that when it matures, the goal I'm trying to achieve, I would have achieved that when I get the lump sum to do what I need to do. So whether it's for retirement, a rainy day, starting a business, always remember to have that goal in mind as we approach investing. Now, for a lot of us who want to invest, some of us may have come across scams, like the whole men's goal saga, a lot of microfinances. Some of us may have realize that the sort of investments you are trying to do are too time intensive. I personally have experience with Data Bank, where back in 2021, 2022, when I wanted to invest with them, I manually had to go there every single day for my investment and stuff like that. And it got very tedious for me. And I felt like investment should be easy, and it should not require me to come and spend an hour to 2 hours every time I need to put money in this account. There should be a better way. So for some of us, you may have been dissuaded from investment because it takes a lot of time just to leave your work, go and deposit money and come back. Even for treasury bills, some of us have faced that issue from time to time. Sometimes it's too complicated. Some of us may have heard of certain investments, maybe outside of treasury bill, we have heard of forex and some other things, and we may be interested, but we are like, but I don't understand all these things, and I don't have the time to look at when the dollar is going up and buy the Japanese yen, and I don't have time for those things, so I'm not even going to bother. And then some to me have of us may have heard of investments, but we compare it to the normal treasury bill, like treasury bill is simple. I just go, I buy treasury bill, I get 23%. This investment, they only give me like what 15%, and they will still take charges for maybe management fees and stuff. Like, why should I do this compared to treasury bill? I'll just do treasury bill and be okay. And then the last reason why some of us don't consider a lot of other investments is because it doesn't beat cost of living. I've had friends tell me that, okay, I put money in this investment, whether it's A or B or C, I'll mention names. And then I look at the return I get. When I went to market last year, YAM was this price. Now I go to market this time, YAM has gone up by 30%. The investment is going to return 15%. So I'm even losing money by putting investment. What's the point of this investment? Why should I even do it? I'll just take the money I'm going to use to buy YAM and food stuffs, because I'm wasting the money by putting into an investment. Because of the fact that these investments don't beat cost of living, we just decide not to even bother with investment. Okay, so let me show you um, some research we conducted on something interesting I think everybody here should see. So I'll stop sharing this, and then basically what you're about to see is we compiled some data on the treasury bill rates for as long as we could get, which was I think from the 90s. and then the CD to dollar rate from 1960s till date. I wanted to see what was the year on year, you just bring the entire screen, year on year depreciation from CD to dollar, and compare that to the treasury bill rate, and see what that tells us about treasury bills and how the CD depreciates against the dollar and stuff like that. And what we realized was that this is just from 1990, but if I click here and go back, we'll see that we have all the way from 1960s till 2020. And if you look at it, I'll start from 1990s just to give us an idea of what we are looking at. 1990 and let's see 2021. Oh, sorry. Yeah. On average, year to year depreciation of the CD to the dollar. 1990 was 20%, 1991 was 12%, 18%, and it just keeps going 48% all the way to 2020. And on average, which is what is here at the bottom, the average depreciation year on year from 1990 to 2020 was 20%. The reason why I compare it to treasury bill rates is because when you have the treasury bill rates um, over here, and we had a lot of other rates you compared, it normally hovers between 17% and 23%, which means if you are comparing how much the C is depreciation against the dollar and the treasury bill rate, you are only getting about sometimes negative 3 to 3% on your money if you are really subtracting the depreciation of the C to the dollar and looking at just the value you get on the return of the investment itself, which means you're actively most of the time losing money by putting in treasury bill, because a lot of us rely on goods that are bought from outside. Even if we don't buy goods through e-commerce, we buy food, we buy things from the market which comes from outside. And when they are pricing us, they count the cost of getting the goods from outside into the product. And so you are paying for depreciation of your CD in the goods you buy from the market. So if the investment you are doing does not account for this depreciation in the CD, you're essentially just losing money. And I felt like this was something that most Ghanaians don't consider when they are investing in things like treasury bill. Treasury bill has its place, and I'm not saying nobody should do that. It has its place. But in the long term, if you are doing treasury bill for 10, 20 years, this is basically what's happening. You are barely keeping up, and sometimes going to negative against the dollar. Because again, that 20% you think you are getting is a good deal, is you basically losing out to the dollar. So yeah, even with bonds and stuff like that, most of them hover around 24%. And unfortunately, even with bonds, when you get past the 2 year treasury notes, you get to 3 years, 10 years, and stuff like that. Unfortunately, you have situations where there have been haircuts and stuff like that. So you don't even want to take the risk of put your money in bonds and having to take a haircut. So treasury bills and treasury notes, which is about 2 year investments, are basically the safest, and they are offering you 20 to 23%, which again, compared to the dollar, you actually underperform when you do the comparison, the analysis. Again, if you want this data to go and do some calculations yourself, I'll happily share it with you after the class so you can go and do your own research based on that. Now, come back to our um, our slides. Okay, so if we realize that if we invest in treasury bill in the long term, we look at the C to dollar depreciation, we will still be losing money. If you realize that there are a lot of investments that may be scammed out there, some of us may have been scammed. And if you realize that some investments exist out there which are just too difficult to understand, is there an investment which is easy enough to understand? It's not going to take me too much time when I'm investing, and it's simple. I don't need to have go online, spend hours trying to understand this investment and stuff like that. Yes, there's an investment like that. And they are what you call index funds. Now, index funds are, some of us might have been seen this stuff before. Index funds are investments that allow us to buy um, shares in a stock that represents the entire economy of particular countries or particular sectors. So what that means is that, let me use the example of the S&P 500. S&P 500 stands for Standard and Poor's 500, which means that in the US, they basically invested, they basically come up with an investment package where they take the top 500 companies in the US from different sectors. We have agri, we have tech, we have healthcare. And they said, let's put all these 500 companies together as one stock. So when you invest in this stock, you're not just investing in one company, you're investing in the entire US economy. So it's like, imagine we had something like that in Ghana where we say, okay, let's put MTN, um, let's put Tobinco, big companies from all different sectors into one stock. So when I buy, I'm not just buying an MTN, I'm buying shares in all these companies. So that when one company is going up and the other is going down, it balances my investment. I can maximize my return while reducing my risk. And the good thing is that I don't have to focus on which stock is going up, which stock is going down. The companies that are controlling this stock manage those things. They have um, mathematical ratios and how they use to manage these investments. And so I don't have to worry about, hey, my investment is going down, I'm losing money because MTN is going down, Tobacco has lost money and stuff like that. So that's what the S&P 500 is. Just an index fund that is all about taking your money and spreading it across the entire US economy so that where in general, when the US economy is doing well, um, overall your investment does well. And because the US economy is so big, there's always some aspect of the economy that's doing well. If health is not doing well, tech is doing well. Tech is not doing well, something else is doing well. That's what the S&P 500 is. But because it's stable, when it comes to things that when the market is really soaring, it is limited because they are trying to manage risk, not maximize returns. So as much as they are trying to minimize your losses, they're also not interested in maximizing gains because it's all about risk management. And that's where the Nasdaq comes in. The Nasdaq is made up of tech companies. And as we've seen over the last maybe 10 or so years, Microsoft, Amazon, Apple, these tech companies are all doing well. And so if you want to invest in something that is also about maximizing returns, that's where the Nasdaq comes in. But what I normally would recommend is that you have a mixture of both. Preferably more of the S&P than the Nasdaq because you want to manage your risk. So you could probably do like 80% S&P and 20% Nasdaq so that you gain something from the Nasdaq when it's going up. So when companies like Tesla or Apple or Microsoft are going up, you benefit from that. But you have majority in the S&P 500 so that you get to manage your risk and you don't have this up and down in your cash. Okay, so one other thing I'll add before we get to questions, because I'm sure all of you have a number of them, is some people ask me, is it day trading? Is it similar to Forex? Is it? And no, it's not day trading. Day trading basically means that every day you are looking at which company is going up, which company is going down. It is, like I said, an ETF, a fixed one stock, which is the S&P, another stock, which is the Nasdaq, where you just put in money and you forget it. So if you want, you can put in money every month. I think the longest you go without putting money in is like every quarter. But you just put money in, whether it's going up or going down, and forget about it. You don't look at, hey, the price is going down, let me put money in. The price is going up, now let me take money out. I've had people who have thought and I've said, just put money in consistently, and they done it, it's best for them. Some people too, they decide that, well, I'll wait when the market is going down or when the price is going down, then I'll buy. And when it's going up, then I'll sell. We say time in the market beats time in the market, which means consistently putting money in the market, whether it's going up or down, is better than trying to see, engage when the price is going up and take money out, and when the price is going down, you are just spending a lot of time on that thing when you should be spending doing other things. Investment should be something like I said that should be boring. It should not be time consuming. It should be easy. So people are working behind the scenes to solve that problem for you. All you have to do is put in money consistently, let the money go for you. Not now spend time looking at the price when it's going up and going down. A lot of people have other things to do, and I think your time will be better saved doing something elsewhere. So it's not that kind of trading. It's not new. The S&P 500 has been around since 1925. It's older than Ghana. The Nasdaq has been around since 1980. So 1980 till now is about 45 years. I mean, both these investments have been around for a long time, continue to be around. So you have nothing to be worried about. And it's not a scam because there are ways to see this investment is doing well. If you've had ever done an investment in the past, like not just treasury bill, but probably other investments, you see that every once in a while they'll send you some prospectus, some report, and saying this is how well the investment is doing and stuff like that. These companies will also be saying those things, letting you see how your investment is doing. If it was a scam, most scams don't are not interested in showing you how your investment is doing because the more you start looking to your investment, the more they share information with you, the more likely you are to realize that, hey, this investment is probably a scam because there are certain things here that don't make sense. But again, these investments have been around for some of them have been around for over 100 years, some of them have been around for more than 30 years, and they are not going away anytime soon. So you can rest assured that they are not scams. So anyway, the last thing I'll say is that some of us may look at what is the time frame for this kind of investments. And normally I recommend like minimum 3 to 5 years because these investments, just like some other investments, have periods of ups and downs. And sometimes during the downs that um, of investing that you make your maximum returns. And what that means is that we have some periods where maybe an investment may go up, may go down by let's say 10%, and then go up by 50%. So it is when you invest in maybe when it goes down by 10% that you reap even more when it goes up again. Because if you buy negative 10% and then it goes up by 50%, you kind of made about 60% because you bought at negative 10% and you sold at 50%. So the ups and downs and cycles are normal. Don't panic, don't get scared. In the long run, the S&P is one of the best stocks you can have long term. And the S&P normally returns about 8 to 10% on average, but it's more like 10 to 10 12% if you account for. So it's 10 to 12% if you're not accounting for inflation, and then 8 to 10% if you subtract inflation. And this may seem like, oh, it's low. But when you consider the fact that it's 8 to 10% in addition to this 20% depreciation you're talking about, if you're looking at in terms of traditional Ghanaian investment, you're looking at somewhere from 30% to more than that because you're accounting for the depreciation of the CD and then that 10% to 12% on top of that. That's the true return on investment you get. Another thing I'll say about the S&P and the Nasdaq is that the management fees are very low. I've done a lot of traditional investments. We have situations where they are charging you 5% or 10% on top of what you are getting. These S&P and Nasdaq, they charge you 0.01%, 0.02%. So most of the money is yours. Compared to this other investment where they are charging 1 to 2% of your interest, not even your capital, of the interest you make. So that's something you should also keep in mind. So in terms of diversification, which a lot of us have done investments, the S&P and Nasdaq already does it for you. It spreads your money across many companies. In terms of the time frame, you're looking at 3 to 5 years, which means if you want to invest something that is less, that has a shorter time frame, we are looking at maybe a treasury bill or something else which I'll show in a bit, which we call a liquidity fund. And then if you're looking to invest, like I've said, don't be trying to gauge the price. Be consistent. Do it every month or at most every quarter. Be consistent with the investment. Okay. So when it comes to investments that maybe you want to do just for a short period of time, like a year or less, I'll probably recommend IC Securities Liquidity Fund. And the benefit of that is that it has some of the perks of not being time consuming, being boring, being easy, and being safe. I've done it myself a number of times. What it does is that basically takes treasury bills, bonds, and a lot of our safe local securities and then puts it together in one package. And so you can get to buy it and benefit from like the rate you get on treasury bill without going to the bank and doing treasury bills. And the good thing about it is that if you want your money within one working day, I wouldn't say within, but after one working day, you get your money. So you can decide that, okay, I have some money I'm using for the next 3 months. Then put it in this IC Securities Liquidity Fund. and then it is earning like it would earn on the treasury bill. So if it stays for 3 months, what you would have got in treasury bill, you get something similar without having to go to the bank and take your money out or wait for the 3 months to elapse. You can take your money out if you realize that, oh, I thought I need it for 3 months, but after 2 months, I need some money for something. You can go and take it out and you get your money out. Very simple, very easy investment you can do if you are looking for more short term investments for those things. Okay. Um, so these two are videos of people's experience investing in the S&P. Like I said, I'll share the PowerPoint with you. You can go in there and watch people's experiences with the S&P and how it has returned over time. This lady's one in particular is quite interesting because she gets to show how if you are consistent and you don't try to time the market, you make more money than those of us who try to be like, oh, we can gauge and see when the market is going up and when it's going down, how to buy and sell. So you can see more experience, the mistakes she made, and how you can make sure you don't make those same mistakes. Okay, I tried to make sure that I kept to time. Um, Let me see how many minutes I've taken. Okay, 25 minutes. I think I'm kind of within time. So I would pause now. And like I said to many of you when I try to reach out to you via calls or whatever, I want it to be engaging. So I just wanted to get this stuff out of the way. And then now, a lot of you have your questions you want to ask. I'm open to hearing them. So, yes, some of you have negative experiences with investing. Some of you have been investing for years, but you not heard of these things. I want your questions to start flying. For those of you who have questions. And if also I said something you didn't get qualified, you didn't. If I spoke too fast, you didn't get some things I said. You can also ask about it. Yeah. So Julius, let's start with you. What question do you have?
Uh, Thank you. Good morning to everyone. Hope you hear me,
Morning.
please.
Yeah, I can hear you loud and clear.
Okay. So I wanted to find out if is it possible to make an example? Who say you are saying 10%, 15% over 3 years using doing what SMP.
Yeah.
If you can give us an example, let's say I have I invest, let's say 200 CDs, or let me assume, let's say $20. I guess this is going to
Sure.
be dollar thing, right? So $20 every month. I try to do $20 every month in
Okay.
a stock, or I don't remember how you call it. So in let's say in 3 years, what
All
do I get?
right.
If we can get that example, it will make more sense as compared to the percentages for us. For
Okay.
me.
Okay. I understand what you're trying to say. Um. All right. Okay. Let me. All right. So let's make this. How many minutes is this? Just a compound annually. Okay, I wanted to use something realistic, but let me make this. For now, let's assume this is CD. So let's ignore the dollar coefficient for now. I wanted to use about 30. Okay, so Caleb, I'll come to your question next. It's interesting you brought that up. Um, so let's assume that it's not dollar. Let's assume it's CD. Let's say they're investing 300 CDs to start, and it's for 5 years at an interest rate of 10%. 10%. Hold on. Oh, additional contribution. Okay, sorry about that. That's why the amount is that low. Yeah. So if we are putting in, let's say, 300 CDs a month for 5 years, and we are getting an interest of about 10% on average, That means at the end of the period, we should have about 23,000, 5,000 of which is interest, and then 18,000, which is our total contribution. Now, like I said before, this 10% is only accounting for what you are getting in dollar terms. So if I were to convert it through and add how much we lose due to depreciation, which is about an extra 20%, that means this will not be 10%, it will go up to 30%, because that's the truth. There are a lot of, okay, I'll mention this, but there are some investments in Ghana where you take your money and you invest it there, then you see we are getting 40% returns. That 40% return investment you are getting is basically them getting what they got in the S&P 500 and then converting to Ghana cedis, and then they are giving you the return. So, like for example, I think 2022, let me do this calculation first. 2022, the cedi depreciated against the dollar by about um, close to 100% or so, 2022, 2023. And a particular investment returned 40%. So they got what they got from the S&P. And then also, because they take your money in CDs, when they convert back to CDs, they are taking, after they take out their money fee, they're giving 40%, which means that they're basically saying that the money was 6 years to $1 in 2022. 2023 is 12 cities to $1. And you are getting 40%. We basically took what we got from the S&P, which is that 10%. And then after we converted to Ghana cedi, we also got that 12 cedis or 6 cedis. We subtracted our fee and now we are giving 40%. Some people be like, if I just get my money in dollars and converted, I'll got more. And you probably have been right. Because after you take out their transaction fees and their investment fees and all those things, what you're left is not that much. But some of the platforms that exist like Killer Design, which I'll talk about in a second, when you invest it yourself, you don't get to get charged those negative fees. So for this investment, which we are seeing, the true investment return would have been 37,000, which is 18% in contributions and 18,000 in contributions and 19,000 in interest. So assuming you're putting 300 CDs a month, every month, and again, we are accounting for the C to that depreciation in addition to how much you get from S&P. The actual investment is equal to 30%. And it's on average, so sometimes we will be higher. Like for the past until 2025, from 2020 to 2024, the S&P returned about 20% on average. And again, you are not just having the S&P, you are also mixing up with some other investments. You could sometimes get more than that 10%. So, Julius, does this give you a fair picture where someone is putting in 300
Yeah.
cities a month
Yes,
over
please.
5 years? All right,
Mm.
good. Now, Caleb has a question about platforms like Bamboo and the rest. So I knew someone bring it up, but I'm sure some of you have seen their ads now. I personally use Bamboo, and you can use Bamboo. However, so there's a between something like Bamboo and something like Ladder. So there's a platform called Ladder, which manages your investment for you. So you just join a platform, you put the money in there, and they have a firm that um, invests the money for you. It's not bad if you're an individual investor and don't know what you're doing, but if you have the choice to pick and you know what you're doing, you make much more money than putting it with them. I said that someone has had experience. I went on another platform, I saw the investment they had, and then I also had my Bamboo investment, which I did, and I realized that okay, what I'm getting from Bamboo is more than what I'll get if I give money to these people. So let me just take with Bamboo. The problem with Bamboo is that it has so many options that if you don't know what you are doing, you don't know what stock to buy, you don't know how to manage your portfolio and stuff like that. So you need someone to walk you through the platform, how it works, what are the stocks to buy. And then after you do that, you know, okay, now it's become very simple. I know what to do. I don't have a problem. And if you want to know the particular stocks to buy on Bamboo and stuff like that, well, that is more of a pay class kind of thing. But yes, Bamboo is probably the right platform to use. And if you know what you're doing, you can make decent returns. You can do what I call the set it and forget it, where you just put money in once a month or once a quarter. You don't even look at it. And after 3 years, 4 years, 5 years, you start to realize that, oh, this investment is actually doing well for me. So, yes, bamboo is the way to go. Bamboo also has insurance for investments in case something goes wrong. And they have something where the company also sends you emails of the stocks you bought. So you realize that bamboo is not the one keeping your money. It is just a medium through which the money gets sent to the company. So if you buy the S&P 500 from a particular company, okay, that money is not sitting in bamboo. It's sitting with a company from which you bought the S&P 500 from. And so that company once in a while will be sending you email say, oh, this is how well your stock is doing and stuff like that. So you realize that bamboo doesn't have my money. It is that company that has my money, and they want me to know that my investment is doing well. So that's why they're sending me emails from time to time to see how it's doing. Okay, thanks for that question, Caleb. It's a good question. And thanks for your question, Venus. It's good to see the actual money in figures, not just in percentage. So I see, okay, 300 cities gives me 37,000, 18,000 in principal, 19,000 interest. Yes, any more questions from our people? Okay, Julius, another question.
Please, oh, there are times where you have emergencies. So let's assume you are investing in a stock using bamboo.
And then
Are
you
you allowed
have
to
some
withdraw your money?
emergency. Yeah, so that's why I was like, if you have an investment, it's best to have investments in different things. And probably if you want to have an investment where it splits across bamboo and these longer 5 year investments and short term investments. So in the PowerPoint, I had something about emergency fund, where basically you put money in an emergency fund because you are assuming that you don't know when you need the money, but life happens, things happen. So let me put money aside for when something bad is going to happen or when some emergency I didn't think about happens. So for those investments, split it according to longer and short-term investments. Longer investment will go to bamboo stocks. Short-term investment will go to something like what I said earlier, the liquidity, IC Securities Liquidity Fund. So that investment, hold on, give me a second. Okay. Okay, yeah. That investment would help you because, again, bamboo, for instance, you want to take your money out, you need 3 working days. I securities is 1 working day. So, again, if it's shorter than 1 working day, probably you should just have some cash on hand or something like that. But liquidity fund was made for the intention of if I need money quick, I can get it after 1 working day. If the emergency is something that, oh, I need to take my mother to the hospital tomorrow and I need money. By the time you are waiting to your mother to the hospital, bamboo is saying 3 working days. The money won't come in time. But that's securities. If I say I need take my mother to the hospital tomorrow and I ask for a draw on Tuesday, by Wednesday I'll get the money. Take my mother to the hospital, and that's fine. So do the IC securities partly because you need that emergency fund, like Julius you are saying, and then put more of the longer term investments in the S&P and then the Nasdaq. That's why I said I wouldn't say don't do treasury bill because everybody has times in their life when they need money quickly for certain things. That's what treasury bill is there for. But you also need investments for more long term things. If you know you're going to get investment for 5 years, 10 years, then that one, if you're going to keep it there for that long, you might as well get something for your money. So put that one in the S&P and the Nasdaq. Okay. All right. I was hoping for some more questions. No, does anybody not have any more questions? Okay. All right.
If I can ask again, please.
No problem.
So the S&P and oh, what was the other one you showed?
Yeah, the Nasdaq.
Uh-huh. So these ones, if you invest in them, as you are saying, you don't have to be tracking every day because you know that some people they say they are doing investment, then you go and see their screen. There are some lines be they are tracking things every day.
Yeah, every day.
This one
They
is
call
not
it
part
exactly. They call it a technical trading where they have some lines, some tickers,
That's
and yeah. No, like again, if you want to do that, that's fine. But I'm trying to do something where if you are not someone who wants to spend every time your time behind the PC looking at those things, you don't have to. And I have colleagues who they are into forex, so they will spend 2, 3 hours every day looking at, and a lot of people don't have time for those kind of things. So yeah. This one is not like that, but um, it's for people who I just want an investment where I can put money in. I don't have to every day be doing research on what is going up, what is going down. I don't want to be worrying about, hey, am I losing 20%, 30% of my money today? This is for you, you know. In the long run, in fact, for most of the people who do those kind of things, those is it going up, is it going down? 93% of them lose money. They are stats, you can check them online. 93, 99% of them don't even make money. So for all your research and hey, the Japanese yen is going up, and most of the time you wouldn't even make money. But with this, you know that I don't have to put in a tenth of the stress, and I'm still making more money than those who every day are checking what is happening in the market just to see how much they are making. Okay, all right. So yeah, I would say that um, there's a paid class that's happening next week. That one is around uh, 300, and it's 300 for a number of reasons. Number one, the minimum you need to invest in bamboo every month is $20. So we didn't set that number arbitrarily. We set it for a purpose. I think we set it back at the time when the seed was about 16 seeds. And the argument was that if you cannot spend 300 seeds for one class, just learn to invest. You probably don't have 300 seeds every single month to put aside for investments. And again, this thing is something that you are committing to. You should make sure that you make that commitment that every month I'm putting at least $20 a month to this investment. And if that's going to be a problem for you, then maybe you probably have other issues that you need to fix before you come and start thinking about investments. So, but we when we have the pay class, we take you through the platforms, like I said, uh, how to set up your account, the stocks to buy, and the other stocks which I'll cover in that class, which I won't cover here. And it's all about making sure that you maximize your returns and minimize your risk during times when the economy is good and times when the economy is bad. You know, we'll talk about things like even how to buy gold. Yes, you can buy gold on the stock market without holding physical gold. There are investments you can do when things are not doing so well economically. So that overall, no matter what, whether the world is going to a recession or not, your investment overall is still giving you some returns year on year. Regardless of anything, I want you, if you don't take anything at all from this, I want you to realize that if your money is just sitting there, it's losing money due to inflation and depreciation. You put your money in this treasury level, it is still losing money because of depreciation. So you have to find some other ways and means to put money aside to do those kind of things. So that even if the CD is losing money, you still are making some money investment, some money, some return on investment through the investment you do. And even people who are into business, like I have a friend who he makes quite a good deal of money selling laptops and stuff like that. I would say seven digits in Ghanaian terms. So millions of Ghana cedis a year. He reached out and decided to bank because he realized that I have a business that's making a lot of money. But my business still I can't just take money out of my business because it needs cash to run. So I need some kind of investment so that in case things happen in my life where I need money, I don't pull from my business, I pull from that investment. Or in case I need money to inject my business for something, I can pull from that investment. So even if you have a business, you have somebody that's returning you something, we are looking at financial stability. You know, so in order to have that stability, you need money from multiple places. Someone say multiple streams of income. So have that business, have that side hustle, do all those things. But also have that investment so that in case things are not going well in other areas, you can pull from that side to take care of issues. More of times that whether it's the high security liquidity fund or my Bamboo investments, the amount of times that those things are pulled through for me, I can't even count. So if you leave with nothing else today, um, yeah, start to think about these things and then think about how you can balance your finances so that you don't emergency doesn't just hit you from somewhere, someone falls sick or something happens and then you have no investment for those kind of things. All right. I will post the recording for this session on the platform. And I also post some details about the paid class for those of you who may be interested in that happening next week. But I didn't want to take too much of the time. I wanted to keep it to an hour. So I'll pause now for anybody who has a few more questions. If there aren't any more questions, then in the next 2 minutes, we should wrap up and you can continue with your day. Since Saturdays, a lot of us have things to do, funerals, weddings, other engagements. Okay. All right. I would also say that before I go, you can always reach out to me on WhatsApp between now and next week's class. Some of you may not have questions now, but may have questions about other things. Like some of you may be curious about investments you may have heard of and how they compare to this S&P and NASDAQ. All right, JP, you have a question. Let's go.
Yeah, hello everybody. Good morning. Because you're good. My question is more into mutual funds.
Mutual
Like,
funds, yeah.
yeah, I wanted to do an investment, and I went to EcoBank, and they said it's better if I do mutual funds.
Sure.
So I don't. They explained it, but because my mind was somewhere, I didn't really get the point. But can you give me a little bit before we close up?
Okay, so mutual funds is kind of also a package like the way the S&P is a package, but in a different sense. So mutual funds is like they are taking all the investments, treasury bills, government of Ghana bonds, maybe corporate bonds, putting it all together. Some of them even take investment from other countries. So just like the S&P is like we are taking investments from stocks from all the 500 best companies in the US. Mutual funds also we are taking investment from treasury bill, called Ghana government of Ghana bonds and stuff and putting it all together. And for that, they may have different reasons why they ask you about that. So we have something called KYC in finance, know your customer. You want to know what is the risk appetite. Are you someone who is very aggressive, want to take risks? You're like, oh, I don't care if I lose 10% of my money if I can make 50% interest. But someone is like, I don't want to lose any of my money. So I rather prefer to keep my money than make more interest. And then also you look at what time frame are you looking at the investment. Are you looking at 5 years, 10 years, 3 months, 6 months. Those are the reasons why they said, oh, maybe go for mutual funds. So if you want an understanding of mutual funds, like I said, it's just government of Ghana bonds, treasury bills, and then investment from maybe other countries and other companies that they package together as their own investment package. You know, but whether how it compares to S&P, I would say I don't want to put them down, but to be honest, it still doesn't compare to S&P because if you look at the global economy, the US is driving the global economy. So it's like if you compare any investment to Ghana to investments in this country, it will always lose out. You know. So yeah, in terms of long term, S&P always wins out. But if it's a mutual fund that maybe you are doing for a short period of time, you can go ahead and try that. However, maybe behind the scenes and they reach out to you then look at what investment it is. Because some of these mutual funds, I've had conversation with some people and when I show them the figures, they reconsider. You have to do research and look at is this where I should put my money? But sometimes they make losses. And if you look at losses and you feel like you're not comfortable with it, probably shouldn't do it. So yeah. And just like the Pierre said, if any of you have some other investments or mutual funds and stuff that maybe you want to ask me about behind closed doors, and whether you feel it's a good investment or not, you can reach out to me on those things. Yeah. Okay, I won't say I know some investments that probably people shouldn't be doing putting so much money in, but I don't know everybody in this audience, so I don't want someone to send everybody and say they assume me for information because even though what I'm saying is true, I'm spoiling someone's business. So I prefer to do one-on-ones with you if you have any questions than see anything about those in this call. All right. Thanks for your time again. Yeah, was someone else going to say something?
So the paid class was, I was going to ask how long would it be?
So that one will probably be around the same 1 hour. It will only be longer if from the practicals people have certain questions and stuff like that.
Is it only one Saturday? I don't know if I got
Yeah,
that.
yeah, it's only going to one Saturday. It's only going to be next week
Oh,
Saturday. In fact,
oh,
we only do it next week Saturday. I won't do another class for a while. The last class
oh,
we did that in April, and we haven't done a class since then because we've just been doing something else. So I know some of you may even be interested in like, oh, I'll wait for your next class. The truth is that we don't know when the next class will be. So we are probably better off joining next week's class if you can make it than waiting for maybe April next year or whatever. Uh-huh. So yeah, and then again, if you also want references just to see if I'm legit, because I understand people have had negative experience in the past, you've been burned by person in the past. I can also provide the references, people you can speak to and talk to about their experience with bamboo and the rest, and how I've helped them with it. And there are people who have they went to the bamboo platform, they downloaded the bamboo platform, they didn't see anything there because they're like, I don't know all these stocks, I don't know what to invest in, and they went away. And anytime they came to me, I showed them what to do, and they're like, oh, okay, now I'm making returns on investment. Now it's worth it. So yeah, again, I'll post the information on the platform. And again, even this free video, you know what? Share it with whoever you want to, because I think at the very least, this video should be out there for people to see that when I'm doing investments, these are things I think about. A lot of people are not thinking about these things, you know. So you can when you get video, you can share with whoever you want. I don't mind. But the pay class, no way, that one it stays with you. The people who are paying for that class. All right. Um, I guess we'll call it a day for now. I would
there's a question in the
uh,
chat.
still a question in the chat. Okay, hold on. So let me see who's in the chat. Okay, what be your best picks when investing so that I can go and check on them? Um, okay, I didn't see the Rise Vest one. Rise Vest, I think it's, I would still go with bamboo, so my answer wouldn't change for that when I'm looking at something like Rise Vest. But my best investment package is kind of what I've said. But if you want maybe just an example of uh, maybe a portfolio, what I'll say is that basically have some stocks, have some precious metals, and then there's one other thing which maybe I'll keep for pay clients. But um, you can have some bonds and then some so US bonds, some gold, and then some S&P and Nasdaq. If you have a combination of those packages, no matter what situation, whether we are doing well or the economy is going down, you'll be okay. Some of you may be looking at this and thinking, well, what about individual stocks? All I say for individual stocks is you can do individual stocks. Don't do more than 5%. If you do more than 5%, when the market goes down, to pull your investment down. You know. So in terms of just overall packages, that's what I recommend. Do if you are doing precious metals like gold or silver, no more than 10%. S&P and Nasdaq probably should be closer to 50, 60%, and the rest can go to some kind of US bonds and stuff like. One more about what I'm talking when I say US bonds. Again, that one is you have to come for the pay class. But yeah, anyone who is telling you that go all in into individual investments or individual companies. Yes, you may make money during when the times are good. By recessions, it will help you. And sometimes the founder can come out and say crazy things and you'll be in trouble. Like Tesla. Tesla did well last year during President Trump's election. And after that, he started doing things, and then the stock was just going up and down, up and down. Nvidia too is one of those companies that was going up, and now it's a whole other affair. Again, that's not really for this class. If some of you have questions about these things, what I'm talking about, maybe you can ask me later. Those what not everybody's interested in those kind of things. But yeah, most of the time, most of us should spend time being safe, managing our investment rather than chasing the highest returns. Because most people end up losing more money by chasing the highest returns than just sticking to the basics. But if you still want to do that, again, if you're in the period class, I'll teach you what investments you can do. If you don't mind the more risky stuff, but don't come to me and be like, hey, you should lost money. I'll tell you that this is what I said, that this is the safest thing. We want to take a bit more risk. So that one is up to you. Hey, someone is trying to join the call when we already done. Okay. Yeah, Benedict, sorry, but we just finished the class. So when we are done, I'll share the recording with you. But so sorry, you probably benefit more from the recording because we are about to end the class. Okay, thank you for your time. And like I said, I'll share the recording so that those of us who missed the class and those of us who have to go for funerals and couldn't attend or whatever, you learn from it. Then, like I said, you can share the recording with anybody because I feel at the very least, there are some things here that were said that people should learn and consider when they are trying to invest money for the first time. So, thank you for your time this Saturday. I hope I've given you some things to think about and consider. And enjoy the rest of your Saturday. Have a nice day.